Hello, this is Amanda Kendall with True Resolve Tax Professionals coming to you today to show you a video on a Form 433A OIC. This form is specifically used for taxpayers who are getting ready to submit an offer in compromise with the IRS. This form is about 8 pages long, so in an effort to condense it and keep this video short for your viewing, I have gone ahead and pre-filled out the form, and we're just going to go through what that looks like here. Section 1 is going to be your basic personal and household information. So you're going to put in your information, your spouse's information, address, whether or not you're married or unmarried, if you own your home or rent it, or if you have a different living situation, you'd put that here in the other. Going to put in your children's names, ages, and relationships. And then there's 2 boxes over here. First one is whether or not they are claimed as a dependent on your Form 1040. If they are not, and you mark no here, just know that you are not going to get credit for them in going through the offer process for any expenses related to them unless there is court-ordered child support. Then you also need to answer whether or not they contribute to the household income. The next section here is employment information for wage earners. So this is where you're going to put in yours and your spouse's employment information, how long you've been there, whether or not you have any ownership interest in the business, and what your occupation is. Moving on to page 2 is going to be your personal asset information in section 3. So this is going to be any of your assets. So I've gone in and filled this out. So this taxpayer has a checking account with Bank of America with $1,000 in it. They have a savings account with Bank of America with $15 in it. So the total of the 2 accounts is $1,015. However, right here, it tells you to add lines 1A through 1C. And actually, let me back up. 1C is going to be if you have more than 2 bank accounts, you would add an attachment and provide all this information on those and then put that total there. So then for box 1, you're adding lines 1A through 1C, and you're going to subtract $1,000. This is a credit the IRS gives you for living expenses that are in your bank account. So out of the $1,015 that this taxpayer has in the bank account, we're only putting $15 on line 1 here. I am going to highlight this, and here in a little bit you will see why we're highlighting that, because we're going to come back to that, and that's going to be an important number. Moving on down the road here, we have investment accounts. So this taxpayer has stock account with New York Life that has $1,000 in it. We're able to take the quick sale value, which is 80% of the market value, so $800. There is no loan balance here, so they have $800 in a stock account. So that's going to come down to line 2 because that's the only item they have here. And then we're going to move into retirement accounts. So there is an Edward Jones account with a fair market value of $3,000, giving us a quick sale value of $2,400. However, this taxpayer has a loan against their retirement account, their 401k, for $2,000, leaving it with an actual market value of only $400. That's the only retirement account they have, so we're going to bring that down to line 3. And you'll see as I'm going through, I'm highlighting some of these boxes here, and again, we're going to come back and I'm going to show you why those numbers are important. Next section is cash value of life insurance policies. So this is for whole life policies only. If you have a whole life policy, you need to put that here. We're going to say that this particular taxpayer does not have anything on line 4. Next page is going to continue section 3 with your personal asset information. This is going to be your real estate information is what's going to start on this page. So you're going to put in your address if it's your primary residence, date it was purchased, county and country that it's in, date of final payment, how the title is held, description of property. In most cases, this is going to be a single family home. If you own an apartment complex or something else, then you're going to put in that description here so that the IRS has the description of it. Current market value, you can pull that from a couple different places. I don't ever recommend using just the county valuation or just a Zillow valuation, maybe using an average of the 2, or if you have had a recent appraisal, use that market value that you have there. Again, we get to do the quick sale value here, giving us a market value of $250, bringing that down to $200,000. This particular property has a mortgage on it for $215,000, so there is no equity. If you have more than one property, you would continue to fill this out, and you can add an attachment if you need to, and then all of those come down in total on line 5 here. Next section for our personal assets is going to be vehicles. So you're going to put in the make and the model, the year, the date it was purchased, current mileage, whether it's a loan or a lease, who the creditor is, date of final payment, and the amount of the payment. You're going to do the same thing here with the market value as you did before. I found Kelley Blue Book is a very good place to pull a market value on a vehicle. It's usually pretty accurate if you put in the correct information. So this particular vehicle has a market value of $20,000. Our quick sale value at 80% gives us $16,000. There is a loan on this of $14,500, leaving this particular vehicle having equity of $1,500. Now you'll see right here that it tells you can subtract $3,450 from line 6A. If it's a negative number, put 0. So if you are a single individual filing an offer in compromise, you can subtract $3,450 from this $1,500, bringing that to a 0, but you can't put that into a negative number. Now this taxpayer's spouse also has a vehicle. So we put in the information for the other vehicle. This one does not have a monthly loan payment, has a fair market value of $10,000, quick sale value of $8,000. We've brought that over here since there is no loan balance. And it tells you here if you are filing a joint offer, so two taxpayers, then you can subtract $3,450 from the second vehicle as well. If it's not a joint offer, then you have to enter the amount from line 6C. Since we have done a joint offer to husband and spouse in this case, we're going to subtract the $3,450 from the $8,000, giving us $4,550, and then 6E is your other vehicles, and we total all of your columns 6 to bring us to $4,550 for the vehicle assets. Section 3 continues on page 4 still. This is your other valuable items. So this is going to be any collectible items, jewelry, artwork, safes, items you have in a safe, gun collections, anything that you may have. In this case, we're going to say that this taxpayer doesn't have any specific collections. They just have their general household items. So we've just put in miscellaneous household items. The best way to come up with the market value on this is to go through and figure out, if you were to put everything in your house out on your yard and have a yard sale, what would you bring in from that? And that's going to be the best way to come up with your current market value if you don't have any significantly valuable pieces. So we're going to say that this is $5,000. Our quick sale value is at 80% is $4,000. Bring that over. There's no deductions here, so we bring that here. Now this brings us to our box A, which is available individual equity and assets. So it tells you here, do not include amounts on the lines with the letter beside the number, round to the nearest whole dollar, do not enter a negative number. And then it tells you here, add lines 1 through 7 and enter the amount in box A. So now you'll see I went back, I'm going to scroll up here really quick, highlighted all the lines we're going to add up. So 1, 2, 3, 4, so we have $15, $800, $400. Going down to the next page, we don't have anything on 5. We have $4,550 on line 6, and we have $4,000 on line 7. That gives us a total of $9,765 in available individual equity and assets. So that is part 1 of this form. Going below that is going to be your self-employed information. I'm not filling this out for purposes of this video today. However, if you are self-employed and you have questions on filling out this portion, please don't hesitate to contact our office. The phone number will be at the end of the video. That's going to be your section 5. Section 6 is basically going to come off your profit and loss if you're self-employed, so you'll plug those numbers in there. And then we get to section 7, which is going to be our monthly household income and expense information. So in this case, we're going to put in that the taxpayer makes $4,000 gross wages a month and the spouse makes $3,000 gross wages. If you have other income, whether it is a non-liable spouse that's not involved, interest and dividends, distributions, rental income, if you are self-employed, then you're going to pull that number from the prior page for your business income and plug it in here on line 36, child support or alimony that you receive. I'm going to total up the income. In this case, it's going to be $7,000, and that's going to move us down to our monthly household expense category. You'll see this note here where it says for expenses claimed in boxes 39 and 45 only, you should list the full amount of the allowable standard even if the actual amount you pay is less. And then it tells you where you can find these allowable standards. So you'll want to make sure that you look at those numbers. So here for the food, clothing, and miscellaneous, I've pulled the allowable standard for a household of 4 individuals based on what we filled out on the first page of this form as $1,650. Brought in housing utility expenses for $2,108 a month. That's going to cover their mortgage, that's going to cover all their utility bills, phone, cable, internet. Vehicle loan or lease payment, that came from the previous page or a couple pages prior, the $410 a month that was on the GMC car payment. Then we have vehicle operating costs of $440, no public transportation. These taxpayers pay $400 a month for their health insurance. Out of pocket, they have $196. Again, this comes directly from the standards in the note here to pull that number from there, even if you spend less. No court-ordered payments, no child care, no life insurance. They're paying $1,400 a month in monthly taxes, and they do not have any secured debts or any delinquent state taxes. So we've totaled up all these expenses to get total expenses of $6,604. We had $7,000 of income, so now we have a difference of $396 for box F. Now you're getting to the point in section 8 here where you're actually going to calculate the minimum amount you can offer. So there's 2 different calculations here, and it's going to tell you right here if you will pay your offer in 5 or fewer payments within 5 months or less, that you're going to multiply box F, the 396, by 12 to get 4,752. If you will pay your offer in 6 to 24 months, then you're going to multiply box F of the 396 by 24 to get 9,504. So now we are looking at box A is our 9,765. Again, that is coming from, let's get back to that, right here on page 4 of 8, box A. So that's our 9,765. And then if we enter here our 4,752, let's say that we're going to pay this in 5 or fewer months, then that is going to give us a total offer of $14,517. That is option A if you're going to pay this in 5 or fewer months. Now if we're not going to pay it, then it's going to be $9,504, and that amount is going to change to $9,269 for our offer amount. This number you would then want to transfer over to the Form 656, which there is a video for that, and we will put the link in the comments below so you have access to that to get to that one. And then you're going to move on to section 9, which is other information. These are just some basic yes or no questions that you're going to want to go through and answer. Section 10, you're going to sign and date it, and then down here it's going to give you a list of items that you need to attach and make sure that you've verified when submitting this offer and compromise. So go through and make sure you have all these items and that you're including them when you submit this to the offer. And that is your Form 433A OIC. Again, this form is only used if you are submitting an offer and compromise with the IRS. If you are needing to fill out a financial statement, a Form 433A, we have a video for that. You can search us for that video as well. And if you have any questions, please give us a call. You can reach us at the office at 720-319-8954.